This ETF gives you exposure to two of the most powerful trends out there, very future-proof. First off, read this disclaimer carefully. Okay, so the nice thing about this ETF, okay, which is under industrials, and it is the robotics and the AI ETF, is that it is outperforming the S&P 500 significantly here, 82% from the 52-week low, pretty close to all-time highs. The precise name is Global X Robotics and Artificial Intelligence Thematic ETF. And I'm huge into thematic portfolios, as you can see here with the megatrend portfolios I have designed, which are massively outperforming on average, you know, the S&P 500, and then you have like the pandemics portfolio, which is monstrously outperforming the S&P 500. Okay, so if you look far into the future, okay, decades, I'm pretty sure you would agree that robotics and artificial intelligence will be huge themes. The current stage of both of these is nothing compared to what it will be in the future, hence there's a very good reason, just from a purely like qualitative narrative analysis, to be bullish on these two themes. But let's also here look at some data. So let's look at it, the BOTS ETF against the S&P 500. So this is the percentage of months in which it outperformed the S&P 500, and you can see that there is some seasonality here, especially some strength here in the August-September period and January and March. But unfortunately, we do not have that much data. If you look at the seasonality purely of the BOTS ETF, you can see that September and October are some of the weaker months. It's quite clear that if you look at the 75% of the time here, they close high. This ETF closed higher than it opened in many months. So, yeah, we are in some more mediocre seasonality on some metrics. Here are the weekly data points, and this is all the data we have here for bots. It's been a bit all over the place. This is, however, very characteristic of burgeoning industries. If we had, a chart of the growth of, as an example, radio companies. Of course, radio is not a mega trend nowadays because it's sort of dated technology. But back in the day, there were many like 10-bagger, radio companies. To look at some of these moves here, they are rather big. Like this move here as an example, all of a sudden you do have a 33% move. But then here as an example, you also have a correction down here of minus 17%. Hence, this ETF is for people who have a bit of a stronger stomach. I do, however, think that regardless of your time horizon, it is a good idea to, not lose money and, to protect your gains and cut losses before they become more significant. Because let's say that you bought this ETF here. So you bought here, at this point you have a 14% gain. If you use stop levels, then you could be like stopped out here with an 8% gain. If you did nothing, then you could be here sitting with a minus 26% loss, okay? That's problematic. Hence, even though I am long-term very bullish here on robotics and artificial intelligence, the total gains you would have by some active management could be very substantially greater than what you would have by being very passive. As an example, if your market timing was a bit mediocre, let's say that you bought it here, and you just held on, then you would currently have a 19% gain. 19% is a decent gain, but let's say that you were a bit more of an aggressive market timer. Okay, so saying that you nailed at the bottom here, that would be just unrealistic, but let's say that you bought here as an example. Then you would have a 53% gain. That's a pretty big difference. So active management is a very good idea. If we do look at the current development here, there is a risk. There's definitively a risk here of a double topping pattern. You have a top here, and then you have this top here. You have some exhaustion candles here. We have seen, if you look at the RSI, that it has been very overbought for longer periods before. Hence, the RSI is simply not, when it comes to overbought levels, it is not reliable. So we can't be like, oh, it's got overbought now, so that means it's a sell. If you look here at oversold levels, they have actually been more reliable as bounce levels. So there is reliability there. If you look at the accumulation distribution line, there is some slightly higher level here than what we have back here. That is bullish. That's good. Let's look at the data points, like that, and let's look at the bigger picture. When we look here at the dailies, you can see here that when it comes to oversold levels, they are good. They have historically been good buy zones. Hence, if we do get, if you want a good entry here for this ETF, it's historically that's been these oversold levels have been decent places to buy in the past. So that is just something that you need to be aware of. But even if you do buy at an oversold level, you do want to protect your gains, because in this instance, if you protected your gains, you would have a profit, but if you just held on, you would be through a pretty nasty fall. So that's the current message we here have from the RSI. It's been working as far as oversold levels goes. Looking here at the accumulation distribution, we do have some nice higher high here. That's nice to see. So there are bulls here buying stocks. There's 90% positive correlation with the S&P 500. That is rather strong. Okay, so let's here look at some other metrics. There are options available for this ETF. It is also shortable. Here you can see the performance is pretty good. Expense ratio 0.68%. Yeah, could be cheaper, but it is what it is. If you look here at the PE, let's look whether they are comparable. This is the education, completely irrelevant. Canberra foreign shareholder yield. Yeah, I have no idea. Okay, so basically these are not relevant. This is the pet industry ETF, SDIV. That certainly sounds like some dividend ETF. Yeah, super dividend. Yeah, so we don't get any good comparison here, but it's quite clear that the valuation is a bit high, and the dividend is not that juicy, 0.35%. If you look at the holdings here, you got Nvidia, Intuitive Surgical, you got Yaskawa, Mitsubishi, Brooks Automation, iRobot. So basically a nice mix of robotics and artificial intelligence stocks. Here you can see the sector breakdown. The market cap here, and the regions. Okay, so to sum up my take here on this ETF. Long term, I am definitively bullish. I think that if you look at this ETF, this industry more specifically, because anything can happen to the ETF. But if you look at the industry, looking decades and also years, into the future, there's good reason to be bullish. There's huge growth potential, and these are very powerful trends. Having said that, I do think that active management is always a good idea, because as we saw with some of the illustrative examples, there's a huge difference between where you buy and what kind of gains you have, and the gains you have in regards to how actively you manage your position, which, quite clearly, big difference between 5% here and minus 25%. If you hold on here, you have, 22%, but if you say about around here, then you have 51%, which is a pretty big difference. Okay, so get exposure to powerful megatrends, but always you want to buy low and sell high, and whatever you do, of course, don't fight the trend, and may the trend be with you.